Hey everyone! Welcome to the channel. If you've ever been curious about how the stock market works, what investing is all about, or even if you're wondering, where do I even start? Then stick around, because this video is for you. Today, we're talking about a beginner's guide to stock markets, keeping it simple, straightforward, and, most importantly, practical. Let's get right into it. What is the stock market? Alright, first things first, what is the stock market? Picture this. It's like a big marketplace, but instead of fruits and vegetables, you're buying tiny pieces of companies. These little pieces are called stocks, or shares. And the stock market is simply the place where people buy and sell these shares. Now, there are a couple of key stock exchanges where this happens, like the New York Stock Exchange and NASDAQ in the US, and many others around the world. But don't worry about the names, they all work in similar ways. When you own a share of a company, you actually own a small part of that company. And that's what we call investing. It sounds complicated, but in reality, it's all about buying small slices of companies that you believe in. Why do people invest? Okay, so you might be wondering, why do people invest in the stock market? Great question. There are a few major reasons, but here are the big ones. Wealth building. People invest because they want their money to grow over time. On average, the stock market has given a return of about 7–10% per year. Of course, that's not a guarantee. Some years it's up, some years it's down. But overall, it's been a reliable way to build wealth. Beating inflation. Inflation is the gradual increase in prices over time. If you're just keeping your money in a savings account, it's probably not growing fast enough to keep up with inflation. Investing, however, gives you the chance to grow your money faster than inflation eats it away. Financial goals. People also invest to reach their financial goals, whether that's buying a home, retiring comfortably, or even just gaining a bit of financial freedom. So, now that we understand the why, let's get into the how. Types of investments. There's a whole world of investment options out there, but let's focus on a few types you'll encounter most often as a beginner. Stocks. Stocks are shares in a company, like we talked about. You can buy shares of big companies like Apple or small companies that you think have potential to grow. ETFs. This stands for exchange traded funds. ETFs are a collection of stocks or other securities grouped together. Think of them as a pre-packaged bundle that you can buy into. They're a great way for beginners to diversify, or spread out, their investments. Bonds. Bonds are basically loans you give to a company or the government. In return, they promise to pay you back with a little bit of interest. Bonds are generally more stable than stocks but usually come with lower returns. Each type of investment has its own risk and reward profile, so it's worth doing a little research on each to see which suits you best. How to start investing. Now, let's talk about getting started. It can feel overwhelming, but I'm going to break it down step by step so it's easier to understand. Choose a brokerage. A brokerage is like the bridge that connects you to the stock market. These days, there are so many options, from well-known names like Vanguard and Fidelity to newer apps like Robinhood and E-Trade. Look for one with low fees, good customer support, and a user-friendly interface. Set up an account. This part is easy. You'll set up an account with your chosen brokerage, similar to how you'd open a bank account. You'll need to provide some basic info and go through a few steps to verify your identity. Decide how much to invest. A good rule of thumb for beginners is to start with an amount you're comfortable with, something you won't need to touch for at least a few years. This could be as little as $50, $100, or even $500. Remember, you don't need to be rich to start investing. Pick your investments. For beginners, a simple approach is to start with a broad market ETF. This way, you're not betting on any one company, but rather on the market as a whole. It's low cost, diversified, and a great way to dip your toes in. Think long term. When it comes to investing, the magic happens over time. The longer you're in, the more likely you are to see your money grow. Don't get caught up in day-to-day changes in stock prices, think years, not days. Key concepts to understand. Alright, just a few more key concepts you'll hear a lot as you start your investing journey. Diversification. This is a fancy word for, don't put all your eggs in one basket. If you own a mix of different types of stocks, bonds, or ETFs, you reduce the risk that one poor performer will mess up your whole portfolio. Risk tolerance. Ask yourself, how comfortable are you with risk? Stocks can be volatile, they go up and down in value. Some people are okay with this, others aren't. Know your comfort level and invest accordingly. Compounding. Compounding is basically your money making more money. When you earn returns on your investment, those returns start earning returns too. Over time, this leads to exponential growth. It's why starting early is such a huge advantage. Final tips for success. Alright, as we wrap up, let me leave you with some final tips. Keep learning. The more you learn, the more confident you'll feel. There are tons of resources out there, YouTube channels, podcasts, books. Pick a few and keep up the habit of learning. Stay consistent. Make investing a regular habit. Consider setting up automatic contributions so you're building your portfolio without even thinking about it. Don't panic. Stock markets go up and down. When things go down, don't rush to sell. Remember, you're investing for the long term. And that's it. Just remember, everyone started as a beginner, and you're already ahead of the game by taking the time to learn. Investing is a powerful way to build wealth over time, and you don't need to be a financial expert to get started. Thanks for watching. If you found this helpful, be sure to hit that like button, subscribe for more, and leave a comment if you have questions. Now, go out there and start your investing journey. See you in the next video.